This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or other advice. It is not intended to cause or induce breach of an existing agency agreement.
And welcome back to Vancouver Real Estate Podcast. I'm your host, Adam Scalina.
And I'm your other host, Matt Scalina.
And Matt, today we've got a fantastic episode. If you are somebody that loves real estate, if you are somebody that loves investing in real estate, you're going to have a lot to take away from this episode. We've got Raul Jaime.
Jaime.
VP Investment Management at QuadReal.
That's right. Raul was gracious enough to come down to the studio, talk about QuadReals. Well, we got to back up because we've I'd call Raul a friend.
Would you? Would he call you a friend?
That's the key. We both went to the University of Calgary at the same time. Didn't know each other then.
Doesn't make you friends.
I've skied with him.
Right.
He never sat beside me on the chairlift.
Again, not friends. This sounds like there's been a bunch of coincidences in your life.
We both ended up at the same, and you were there too.
Right.
Where in Pemberton, we spent a night in Pemberton. That was a lot of fun. And now he's on the show.
Yes,
he is the VP of Investment Management at QuadReal, and man, what an insightful guy. So glad to have Raul on the show.
I got to say, I had a lot of good conversations our night in Pemberton,
right?
At a friend of the show, Sam Atkins' place,
right?
With Raul. But man, did he went to the next level on this.
I know. I feel like this was one that blew my hair back a bit.
It did. Yeah.
And the greatest part about this conversation is QuadReal, they're based out of Vancouver, but they focus on global cities. So the way that they approach investing, it speaks to how we think about real estate in Vancouver in a way that, some people who we talk about investing on the show, it doesn't, talking about cash flow and all the rest. Raul is grounded in Vancouver with that larger perspective that QuadReal has. So it's great conversation.
So there were some tips in this program today that I think are some of the most forthright and just frank, kind of like, this is what you should buy.
Right.
type tips.
Yeah.
Right. I love his advice. I think it's super. I've shared it with a few people now, and I did actually an Instagram
I was going to
post.
say you shared it on Instagram.
I did an Instagram post, tons of positive feedback. Tons of people that basically say I've shared this advice, or I've shared these thoughts about the market and investing, similar to Raul. And anyways, it's fantastic. Tons of takeaways
Today. He's also a pretty good snowboarder.
Not friends again. Without further ado, Matt, maybe we should cut to our conversation with Raul Jaime. He's the VP Investment VP of Investment Management.
That's right.
At QuadReal. This is a great one.
Enjoy.
Okay, so we're here with Raul Jaime. He's the Vice President, Investment Management at QuadReal Residential Properties. How you doing, Raul?
Pretty good. Good morning. Nice to see you guys.
Yeah, good. Thanks for coming in and taking the time, Raul. Maybe for our listeners, can you start by telling our listeners a little bit about yourself?
Okay. So every time I get asked that question, I have to say that I have probably the most unorthodox real estate career. I never really set out to be in real estate. My academic background it wasn't going that way to start, but somehow I ended up, getting into real estate like many other people.
So the backstory here is, and I don't know, we got to dig deep, but we met through a mutual friend.
Yeah.
We both were at the University of Calgary in 1997.
Yeah.
You from Mexico, me from Winnipeg.
Yeah.
We didn't meet each other in the den on a Thursday night, but we probably bumped shoulders at some point. What was your what did you study at U of C?
My undergrad is political science.
Oh, it's even more interesting. And you were actually the quarterback of the Dinos, is that right?
I wasn't the quarterback. I was a quarterback for the Dinos. Yes, I always have to make that distinction.
And
so wait a second. Does that mean you saw some playing time, or were you always
a very little of playing time? Yes. Now, like when I tried out for the Dinos, I was 19. Our starting quarterback, Darryl Leeson, was 27. So there was a bit of a gap on experience and strength there.
So think about it, about how you played left wing, but you weren't the left wing.
Yeah, exactly. That makes sense.
Pretty much, yes. Yeah.
I rode the bench a lot.
I did send the signals in for the play. That was my participation in every game.
Okay, so you had to know all the plays.
Yeah, we had hand signals for the game, for the plays. So the coach would tell me the play. I had this little cheat sheet in my wrist with a number, and then the code for the number was sent in with signs.
So you're at you're taking poli-sci, and now you're VP of Investment Management at QuadReal.
Correct.
How do you get into real estate?
Okay, that's a big story. So, as you said, I grew up in Mexico. Came here to university. Didn't really have a plan, to be honest. Got into poli-sci because at the time I thought I liked that sort of thing. I then went on to Spain to do more schooling. I do have a master's in international business. And when I went back to Mexico, I really thought, oh, the jobs are just going to rain on me. This kid has 2 foreign university degrees, and there's going to be a lineup of people trying to hire me, which was not the case. So the town where I was living in Puerto Vallarta during a time when all you had to do was start digging a hole and put some chairs in front of it with a for sale sign, and people would buy real estate. This was 2006-07. So I literally got into real estate because a family, like my mom was in real estate. I started kind of helping her out, and that's all she wrote. I started doing that full time eventually.
And so how'd you get back to Canada then? So you got into real estate in Mexico.
Yeah.
And then walk us through putting a couple chairs out in front of a hole in the ground to QuadReal.
Yeah, so I also did have a daytime job. I actually worked at the Canadian consulate in Puerto Vallarta. And a friend of mine who lived in Calgary, but he's a lawyer from Mexico, was working at the Mexican consulate in Calgary. And both him and myself, being working at the consulate, a lot of people would come in, a lot of Canadians would come in asking questions about buying property in Mexico. Like, hey, I saw a condo, I would be interested in buying it. I would like some advice from the consulate. And obviously consulates don't do that, right? Like we don't give advice, or consulates, the mandate is not to give people advice on making investments or buying property. But my friend Carlos and I realized a lot of deals are not going through because the hesitation that buyers have from going through the process of buying property in a foreign land. So we had this idea of opening a consultancy where we would help people, close on their properties, explain to them all the process of setting up a bank trust, etc. So that was our business basically, and we opened an office in Calgary, and that's how I moved back to Calgary.
Wow! So you were selling real estate in Mexico, or advising on real estate in Mexico from an office in Calgary.
Yes, yeah. So if you remember, we opened the business in 2008.
Okay.
So the timing was a little off, unfortunately. But there really was a huge boom for a while, mostly driven by Americans with, home equity lines of credit. But a lot of Canadians were also buying, and a lot of Canadians continue to buy property in Mexico. It's much cheaper to retire there, and the standard of living you can have there is quite more comfortable than what you can get here on retirement income. So yes, we had an office in Calgary. Our whole idea, and we noticed that people, they go to Mexico on a vacation. Maybe they spend call it a month, and they go tour properties, but then they go back to Edmonton or Lethbridge or whatever they're from. And now they're trying to proceed with the transaction from a far distance. Sometimes there's language barriers. There's definitely a barrier in terms of the legalities and the process itself of acquiring the property there. And a lot of people just hesitated too much and backed out of operations. So we thought that having a physical presence in Calgary, or at least in Canada, people come to our office and know, okay, these guys are here. We charge a fee to help them with the process. We're not part of the sale. And we carry them through to completion.
Huh. But the timing, so the financial crisis hits, presumably the market dries up at least for a short time. Did you ride it out, or was that it?
We did okay for the first while. Then what happened was, you've heard similar stories in Canada, but condo developers rely on pre-sales to finance part of the construction at least.
Sure.
So when the pre-sales dried up in Mexico, a lot of developers actually were very, very delayed in delivering the product. So some of the clients that we had that were going through the process of acquiring a property in Mexico, eventually they actually came back to us asking, hey, this condo is 3 years late, 4 years late. I want my money back. So my partner, Carlos, was a lawyer. He was doing the litigation, right? So our business turned from helping people acquire, it turned a little bit more into helping people get out of
the real estate.
Yeah. So and yes, we were hit pretty hard by the financial crisis.
So maybe fast forwarding a little bit here, Raul. You're now at QuadReal in Vancouver. I know that you worked at a not-for-profit before QuadReal. How do you move from Calgary and Mexican real estate to Vancouver and global real estate?
Right. Yeah. I mean, when I moved to Vancouver, and I moved to Vancouver basically after my business in Calgary was struggling, and real estate has been my background, my professional background. So when I first moved here, I actually worked for Patterson Outdoor. So the billboards. All those billboards have a lease with the property owner. So whether they're on top of a building or on a piece of land or in a parking lot, Patterson Outdoor pays a lease to the landowner, and that was my job. I was negotiating all those leases. So real estate. I went to BC Housing, went to non-for-profit. Now I'm at QuadReal. Like we were saying before that we hit the record button, most developers today must understand affordable housing, right? Like it's coming. If they don't, it's coming their way very quickly. Most municipalities now have requirements that projects have either purpose-built rental units that have either fixed rents or whatever program the municipality comes up on that day. But most new projects are going to have to deal with it one way or the other. So not that, that's my day-to-day at QuadReal, but it definitely comes in handy having that background of how non-for-profits operate, because it's coming up now, right? Our projects, a lot of them have affordable housing components.
Mm-hmm. Mm-hmm. So one last question, then we'll get to get to the market here. Transitioning from a not-for-profit in the real estate space to QuadReal, cultural difference, more overlap than you'd think, totally different environments?
No, it's night and day. I mean, it is a complete difference, right? Like well, first of all, the mandate is different, right? A non-for-profit, as the name says, they can't run a surplus, right? So their operating budgets have to be pretty tight. QuadReal is a for-profit company. We are investors of real estate, and we want to see a return. So it's definitely a cultural shift. However, I don't know if you've had a chance to look through QuadReal's values, but we are a responsible company. Like responsibility is one of our values, and being contributing to the communities where we invest is important to us. So the background that I have from non-for-profits has allowed me to, even at meetings with other non-for-profits that we're now trying to partner with, or with municipalities, or with BC Housing, I come in with that, I've been in the trenches, kind of street cred, if you want. And I do have the experience that's needed to have those conversations when you have to have them.
Right.
Maybe shifting gears a little bit, Raul. So in terms of your role at QuadReal, how closely are you following the market, and what's your take on the current market?
I follow it very closely. We obviously have condo developments going on. You might have heard of Oak Ridge.
Yep. Never heard of it.
And also, as you guys know, a good percentage, and the exact number is hard to know, but 50, 60, 40% of condo sales, of new condo sales, are to investors that are going to rent out the properties. And QuadReal, particularly my group, Residential Properties, we operate apartment buildings. And our main competition is other apartment buildings, but our secondary competition is condominiums owned by an individual landowner that are rented out. That's the secondary market that we compete against. So yes, I look at the market very closely to see what are people buying condos for, because that factors into, okay, if this person paid $1 million for a 1-bedroom or 2-bedroom, how much do they have to rent it for in order to clear a mortgage, or at least break even on their cash flows? So that those factors do come in when we're thinking about new investments, when we're thinking about the rents that we charge for our apartments. So yes, paying close attention to the market. What do I think of the market? So it's hard to buy right now. Interest rates are higher, right? A lot less transactions are happening. In the world that we play day in, day out, which is single title, purpose-built rental buildings, transactions are down. We've seen less transactions. There's been a lot of talk about cap rate expansion. January of last year, start of the year, the highest cap rate was probably 3.5, 3.75 in some suburban markets. With interest rates the way they are today, there's a lot more pressure on, well, have those cap rates gone above 4? However, when you still look at transactions, you're like, well, there's still plenty of transactions, in the low 3s, mid 3s. So we've seen some erosion of value in the residential sector, but it hasn't been as dramatic as I think a lot of people thought would be.
Which kind of mirrors the residential market in a lot of ways too, right? There's been some declines in pricing and actually increase in rents, so cap rates going up, but not the declines. At least have not been as dramatic as a lot of people expected.
Yeah, I mean, if you think about it, the fundamental driver of the Vancouver market is the fact that more people are moving here than there are houses for them to live in. That's a fact. We don't build enough of all kinds of housing, whether it's affordable housing, middle of the market, luxury. Just the numbers of people moving here far exceeds the number of housing units that get delivered. And that's going to continue to drive prices up until municipalities and provincial government and the federal government realize that the affordability issues that you hear about on a daily basis are a supply issue. It's not, additional taxes. There's plenty of taxes already attached to real estate. It's not on the demand side. It's a supply issue.
Mm-hmm. I just want to go back and double click on the interplay between you and your competition. So thinking about the individual kind of mom and pop investor and how much they're going to try and charge for rent to cover the property, or maybe even cash flow in some cases. So how does that inform your analysis? Can we talk a little bit about that? Like, so is there? I'm assuming that QuadReal is acquiring these properties at a lower price per door than what the general public is paying at a pre-sale in a similar location. And so you probably have a bit of a buffer there in terms of what you can charge rent. Are you trying to undercut rent? Are you trying to max rent? Or how does that play out in your mind?
Yeah, I mean, again, QuadReal, we have a mandate to invest prudently and produce a return for BCI. Performance is one of our values, and we have to acquire real estate that's going to allow us with our operating platform to bring a acceptable return to our investors. The economics of an individual buyer buying a condo are different than ours, of course. Like when we buy a building, we did a couple of purchases in North Vancouver a couple of years ago. We paid about $550,000 per door, and we bought almost 200 units. Right? You can't buy a one-bedroom apartment right now for $550,000. We bought almost 200 of them at about that price. So we get a bit of a bulk discount, and there's still, even today, a couple of years later, the deals that I see in the market, you can still pick up an apartment building and pay no more than $650,000 per door, which is not the same you can say for. And this is, I'm talking newer product, right? Like I'm not talking, very old walk-up wood frame built in the 60s in Solano. We're talking newer product, sometimes even concrete. And yes, when you buy the whole building, is much more economical than buying individual units. But since there's enough buyers out there that do buy a condo to rent it out for that specific purpose, and like you said, a lot of people are willing to purchase an investment property and be cash flow neutral. As long as it covers their mortgage, property taxes, and condo fees, they are betting on the appreciation of the asset, right? So that's our analysis is, okay, what's the universe of 1 bedrooms and 2 bedrooms going for in the market, and reverse engineer. I mean, and we also go on Craigslist and all the other sources of rental information when we click around, and a lot of the times you can find a listing for a condo in Yaletown and a listing for sale and a listing on Craigslist for a rental in the same building, right? So you can say, oh, well, this person's renting it for X amount. This is what they're going for on the market. So we started to do an analysis of, okay, how is our competition secondary market going to be pricing their units? And therefore, in our underwriting, we can't say, oh, we're going to get $2,500 for a 1 bedroom when there's a universe of 1 bedrooms going for $2,000, right?
Sure.
So it's we have our ear to the ground, constantly reviewing what the market is absorbing. Obviously, we have the data from our own properties that we look at super closely as well. But a combination of those things is what helps us make decisions.
Is QuadReal doing furnished rentals as well, or is it more long-term vacant rentals?
Yeah, currently we only do long-term rentals unfurnished. Definitely, we are exploring the possibility of doing furnished apartments for shorter-term stays. It's tricky. Different municipalities have different rules on length of stay. The RTA also comes in, the Residential Tenancy Act. But right now, all we have is long-term rentals unfurnished, but we're definitely exploring alternatives. We do have some partnerships with shorter-term stay companies within our buildings. It's something that we're going to explore even more.
And in thinking about the market still, has the fact that a lot of new policies around rentals and the Residential Tenancy Act have come in the past few years. If you talk to commercial brokers, it seems like multifamily has been kind of beat up the worst right now. Are you seeing opportunities in multifamily right now, or is it generally fairly stable?
We still see opportunities. However, we do hear constantly the negative press, the negative rhetoric from politicians about rental housing, and we frankly we resent it because we see ourselves and all the other landlords have ever spoken to. We see ourselves as part of the solution and not part of the problem. We want to provide rental housing. We do it well. Only a very diligent steward of the asset will make sure that a building provides housing for a very long period of time and quality housing, right? Like we want to charge market rent. But in order to charge market rent, we have to maintain the buildings and we have to spend a lot of money maintaining the buildings. We provide exceptional customer service. Like I would say we're best in class when it comes to customer service. And well, there's a cost associated to that. But there's also an impact to the people that live in our buildings. Their quality of life is significantly improved because of all the things that come attached to living in a professionally managed building by QuadReal, right? So yes, we wish that rental housing and housing in general was not so politicized. Some of the policies that are introduced, frankly, are counterproductive. But there's still opportunities. There's still opportunities because, and I'm going to jump ahead to one of your other questions. Vancouver is a global city. Right? Vancouver is a place where people want to be, not only because of its natural beauty, but there's plenty of options for employment, from a very strong tech sector to film industry to resources, tourism, etc. So it's a dynamic city, and we still see a long run here. We have investments that back that up, like Oak Ridge, for example, and we're going to continue to be here for a while. And we are Vancouver based. Vancouver is our headquarters.
Can we talk about how you think about, and I think this was before we went live too, but we were talking about low yields,
right,
on properties here in Vancouver versus other places.
Yeah.
It is notable QuadReal likes global cities, right? Based in Vancouver, heavily invested in Vancouver, also other global cities. Can you talk about that interplay and how and why QuadReal focuses on global cities, even though at least at the acquisition point, the yields and the cap rates are low?
Yeah. Okay. So I'll start with the yields and the cap rates. So residential real estate, typically trades depending on what it is, but I've seen trades as low as 2.9 cap, and now they're closer to the fours. That's still a pretty low yielding asset class, particularly when you look at your cost of borrowing money currently.
Sure,
you can't borrow at less than 4%. So if you're going to acquire something that's yielding less than what you're borrowing at, it's hard to make sense of it.
It's a losing proposition.
Yeah. But there's still some options out there. There's still, if you're creative in your deal structure, you can still make it work. Again, when you are a best-in-class operator of real estate, we think, and we think that because we've done it, we can draw the most value from our assets, right? Like we can squeeze the most juice out of them. Other operators are not as good at it as we are. Talking about global cities, QuadReal has $67 billion worth of assets under management. It started out being mostly in Canada. It has now transitioned more internationally. Well, I don't get involved too much in the international portfolio. In Canada, I know that, at least for residential, our two areas of conviction or cities of conviction are Vancouver and Toronto. And the same reasons for Vancouver are the same reasons for Toronto. It attracts a lot of immigration, and it attracts a lot of skilled immigration, right? Like people who come here come prepared to hit the job market day one and contribute right away. We have the likes of Amazon significantly betting on Vancouver, and we're encouraged by that. It's also interesting that we do own the Post, where Amazon is going to be moving into. But when we see global companies betting on the cities that we also invest in, it reinforces the idea that our strategy is aligned with what the world economy is moving towards. internationally, we look at cities that have a long runway of economic prosperity and options, right? Like I'll give an example of Calgary. You know, we love Calgary, but we struggle with the fact that the Alberta economy is so dependent on just the one industry or one or two industries, oil and gas. That has brought some challenges in the recent past. Calgary went through a bit of a rough patch there for a while.
Mm-hmm.
It's currently resurging very strongly. But I think it's resurging because a very particular geopolitical incident, the invasion of Ukraine by Russia. So that disruption in the oil markets gave Calgary a second wind in certain respects. But it could also flip the other way. So we're a little cautious of economies and of cities that may not have a very diversified economy. We don't want to be stuck with something that, is too spiky. We like flat growth, steady growth, but spikes we prefer not to get too involved in that.
Okay, because the next question was, what do you think of Edmonton?
Should Matt buy in Calgary? That was I once heard it said, I think on the commercial podcast that in Vancouver you pay for the vacancy rate. That's what you're paying for, is that low vacancy rate. Do you agree with that?
Yeah, I mean, we operate at about 96% occupancy. So only about 4% of our units are down at any one given time.
Mm-hmm.
What does that mean? It means that you constantly have money coming in. Even through the pandemic, we were very concerned. I think everybody was concerned during the pandemic about our tenants of all kinds, be it residential tenants or commercial tenants, are they going to stop paying rent? And we saw more resiliency in residential tenants paying rent than in commercial tenants. So people, want to pay their rent. We also feel it's in part, at least, because of the great value we provide, right, and the great customer service we provide. So our residents recognize it, and they want to continue paying their rent. And even through the pandemic, yes, our vacancy increased. Like a lot of people moved out and moved back home. But the people that remained continued to pay rent. And even today, so now that we're back pretty much to pre-pandemic levels, at least in occupancy, yes, like it's easier to make your operations work when you have 96% of your building occupied.
Just thinking about the pandemic a little bit, one thing, we've been doing this since 2016. And I feel like 2016 to 2020, we talked a lot about global cities, and Vancouver being a global city, and how to understand Vancouver in this kind of larger environment of superstar cities or global cities or whatever. COVID flipped the script almost entirely, where we started talking about secondary markets a lot and people leaving, and the rise of the Fraser Valley or Nanaimo or wherever. Right. I'm just wondering if QuadReal, as being a company that that is based on looking at global cities, like, did you change your strategy at all over COVID? Did you pivot in any way, or was it still a kind of fundamental belief in looking for those cities that have those those qualities that we've already talked about?
No, our fundamental belief stay the same, right? Like, we shifted a little bit strategy on the asset class that we like. We shifted a little bit more heavily onto industrial, for example. We've also now invested more in data centers and logistics centers. But the core cities, what we look after in a place to invest, has remained the same. We're confident that we're doing the right thing there. I'm going to also jump ahead to one of your other questions, please.
We did give you the questions beforehand.
You did, yes. And I did do my homework, even though it was this morning, but I did do my homework. You should read The Triumph of the City by Edward Glaser, or Glasser, I don't know how to pronounce his last name. Great book that talks about why cities rise and fall, but mostly rise. Why big cities seem to thrive so much. Like examples of New York is a place that's it's so massive that you think, wow, is this place like how can it continue to be always kind of on the top of the map as a global city? And that book really dives into it, right? There's a little bit of a section about Vancouver actually in the book, even though it was written by a guy from Boston, but it does touch on Vancouver and access to Asia, and for Canada at least being the closest market to originally Hong Kong and obviously China, Japan, etc. But I'm a firm believer that cities will continue to be the place where ideas thrive, and from ideas that thrive come economic progress and opportunity for people, right? So, um, there's a section of the book, and I'm gonna completely screw it up probably, but Detroit, and it talks about why Detroit, which seems to be in the middle of nowhere, or at least in the middle of the country, why it was such a successful city for a while. It's gone sideways now, and it's gone sideways because they were not able to pivot and diversify its industry. They just fully bet on the automotive industry, and that has not gone as planned. But it was a transportation hub, so it was close to rivers, and it was easy to do commerce from there, right? So most cities, when you look at the history, they were places where people would come, bring their products to a central place to trade, and then from there, people went back to their communities. But the city is where trade happens, where ideas happen, and those ideas then thrive. And if you're a kid that grew up, in a small town, or the opportunities that town offers you are so limited compared to what a city would offer you. Like the things that you can do in a city as a profession are way more varied than they are in smaller towns. So that's why I think, firm believer, cities will continue to thrive. Yes, there's been a bit of a move on people working from home. I personally also think that's not going to last too long. And that's why at QuadReal, we continue to bet on big cities.
It's interesting because what you're doing at QuadReal, specifically your role, is you're doing like a more sophisticated, larger scale approach to what a lot of mom and pop investors are doing, really, right? In some instances. Can you talk about like what makes a good deal, and then also if we're just thinking about the city, like are there certain metrics that like population growth or certain industries? And I know you want to look for a diverse market, but are there other industries that really, if you see, like, I feel like every development company, when they're building a building, they talk about how tech is coming to that specific market, whether it's true or
Victoria,
not. But are there
Calgary?
Yeah,
everybody's talking about.
Everybody throws tech into their marketing brochures as an industry coming, right? That everyone should be excited about. I guess what makes a future city for you, or something that makes you excited to invest?
Right. I mean, for us, a good deal, and I can get maybe I'll start macro, but I think we discussed it enough. Macro, like it has to be a thriving city that is not just thriving temporarily. We want to see something that we can tell there's a good runway. And how can we tell that? Partly it's immigration, right? Like we look at how many people are moving here, what kind of companies are setting up shop here. So that's important to us. If we get a little bit more specific at the ground level, we are very focused on TOD, transit-oriented development. We have seen in our own properties and just from the sharing economy and other factors out there, driving a car is a bit of a thing of the past. I'm not saying that cars are going to disappear anytime soon, but public transit is much more convenient than driving, right? So we try to make sure that most of our development and acquisitions are easily accessible through transit. Other things we look at, environmental risk, for example. There's areas even in the Lower Mainland, like Richmond, where sea level rise could threaten an investment, right? So we pay close attention to that. More particulars about the deal. For us, we are, like I said before, a best-in-class operator. And in order to be a best-in-class operator, we do have a little bit more robust of a operating platform. So, having less than a couple of hundred units makes it hard for us to roll out the staffing model that we want to have in place in order to provide the service that we want to provide, and operate the building the best we can. We also don't like, when we're doing acquisitions, we don't like things that have a lot of capital demands coming up. We try to buy buildings that are fairly new. I also mentioned this before. We pride ourselves in how diligent we are as a steward of the asset, and acquiring something that has a lot of capital work needed is kind of counter to what we like doing, right? Like we want to have properties that are in as good of a shape as they can be, regardless of age. But if we're acquiring something from somebody who has not been as diligent with their maintenance as we are, it's that doesn't fit very well with our model. So we try to stick to as new as possible if we're acquiring something that somebody else built, and if we're developing ourselves, then we go all out and make sure that the developments check all of our little boxes, right? Like the transit, location. We like concrete over wood frame, for example. We like scale, so we like big buildings. And second part of the question was,
basically just if I guess not only cities, and then how you analyze, essentially how you analyze a good deal. Really, like what factors go into making a good buy.
Yeah, I mean, we look at IRR, right? So
Yeah.
we're gonna buy and hold, and we do a 10-year analysis of like how much is this property going to yield. We attach a pretty significant amount of leverage to all of our acquisitions, and then we try to determine what a adequate terminal value is going to be. So when we get rid of the property, try to do projections on 10 years down the road, where do we think cap rates are going to be at? And I know it's tricky to predict that with any accuracy, but that's what we try to do.
So if I understand correctly, and I mean, this is, you guys seem to be almost winning by just being the best operators in a lot of cases, right? It's almost a warning or a lesson for small time landlords that they shouldn't be absentee. They should be providing a good situation for their tenants.
Absolutely.
Good service, right? Which is interesting. And if I understand the long runway, so it's not betting on the cap rate today; it's betting on the cap rate tomorrow.
I mean, we bet on everything, right? We can't just rely on very compressed cap rate on exit to make an investment decision, because we're gonna be holding the asset for several years until that may or may not come to fruition, right? So we look at a lot of aspects of the investment. It's not just IRR. It's not just yield. It's not just terminal value. It's a combination of factors, right? So we have a very sophisticated acquisitions process, and unless several of us in the room nod our head and give it the thumbs up, if there's not substantial support for it, we're not buying it. We're not desperate to just buy something. Like, we want to make sure that everything we buy fits with our long-term objectives, and that we're not, taking decisions lightly.
Can we talk a little bit about projections? We always have forecasting questions, but we're not necessarily. I'm not. We'll save it for the end when we say what does the market look like in 6 months. But like a 10-year projection, do you have those? Can you talk about how you get to the numbers where you're factoring in? Okay, this is what 10 years out looks like.
Mm-hmm. Yeah, I mean, some of them are easy. Like, some of them we have plenty of data to support. For example, rent growth, right? We look at historical trends. We have economic trends that we look at as well, and we can make a projection of, say, okay, we think market rents are going to be going up by, call it 4% year upon year, right? That sounds conservative. If I say 4%, because if you look at data from newspapers or whatnot, you'll see rents are much higher than that. But when you're trying to underwrite a 200-unit building, if you get too aggressive on your rent growth, then it's going to start to look a little bit skewed, right? It's like, oh, that sounds a little too optimistic, Raul. Somebody's going to say in the room. so we try to be, optimistic about it, but with our feet firmly planted on, okay, let's not overpromise here. In BC, as you know, there's rent control as well,
Sure.
right? So then there's the second factor to market rent growth is turnover.
Right.
So if people stay in the units for a long period of time, we have less capacity to catch up to market rent. So, that last year, through the pandemic, rents were frozen for renewal contracts. And then in the last year, which was, John Horgan's exit surprise, they fixed rents at 2% increases for 2022, which was, not a pleasantly received news. Sorry, for 2023. 2022 was 1.4, 1.5%, I believe.
Right.
So since we only have, call it 25% of the building will turn over, only those 25% of the units can catch up to market. So part of my criticism of measures like rent control is that, yes, you're fixing the rent for the people that are staying, but it pushes ourselves and all the landlords to really increase rents when a unit becomes vacant. Now, somebody out there is going to listen to this, going to think, oh, we should put some rent controls on the vacant units as well. Well, that's just going to put another obstacle in delivering more housing. Anyway, let's not get into that. But the way we calculate it is, okay, we're going to acquire this property for X amount. It's going to yield whatever it's yielding when we buy it. What strategies can we put in place to increase those yields? We can renovate suites, for example. We can reposition the market. Maybe we start marketing it to a different demographic that tends to stay longer. For example, we and this some practical advice for your customers out there. If you are thinking of buying a condo to rent or a few condos to rent, you're better off buying 2 one-bedroom condos than 1 two-bedroom condo. Yeah. So, you're diversifying, right? You have the same investment, maybe split into 2 options. And then the people that rent a one-bedroom typically stay less. So they'll stay, a couple of years, and then they'll move on because people move away because of life events, right? Like they either got married or engaged, or they got a job opportunity somewhere else, so they had to move. So for the mom and pop's condo investor, I would recommend buying a smaller unit over a large one. So we look at that as well. So when we're trying to acquire a building, if it has too many 3 bedrooms, we are not as attracted to that because they sit vacant longer, and the people that eventually do rent out a 3-bedroom apartment
never leave.
So we play around with vacancy, we play around with rent growth. On terminal value, on cap rates, it's hard, right? Like, if somebody asked me the question January of last year, what the year-end value for assets was going to be, I would have given a completely different answer than I would have given in September when all this interest rate hikes came in, and now we are in a situation where like interest rates are significantly higher than they have been for the last 10 years. So obviously it pushes values down for many asset classes, but particularly for residential because the yields were so close to the cost of borrowing money already. But regardless, if you do an IRR model, your terminal value drives a lot of the return. So we don't want to be too optimistic on saying, when we sell this thing 10 years down the road, it's going to be triple what we pay for it, right? Because then that also looks a little bit funny.
Right.
So within the trickiness of trying to predict something 10 years down the road, we do try to come up with our best estimate of either a flat cap rate on terminal or a little bit of decompression as we come out.
I'm fascinated with the all the conversation around the future cities, and obviously Vancouver and Toronto are cities you've got your eye on and you're operating in. What other cities in Canada? Calgary is getting an artificial bump right now, potentially. What other cities in Canada are you excited about?
I mean, you gotta understand that QuadReal and capital in general is global, right? Like capital chases opportunity. There isn't. I mean, Canada only has a few cities that exceed 1 million people, and most of those cities are right against the border. I've heard some chat about Kelowna, for example. There's some interesting things happening in Kelowna. The issue is sometimes scale, right? Like when the market is small and there's a bit of a real estate boom, you could be in a situation where the fundamentals that we discussed about Vancouver, where there's significantly more people moving in than there's housing being built. In smaller cities, that equation is not as dramatic, right? So a few deliveries of large buildings in Kelowna may balance the equation a little too much and erode the opportunity. But definitely, we've looked at Kelowna as something that, let's keep an eye on that market, see what keeps happening there, and discuss it down the road. But Kelowna is competing for capital against, I don't know, Austin or Tennessee. So it's
and can we expand out to North America? Like, where in the U.S. are you excited?
Is there a place where it's like, wow, here's an
Everything
opportunity
lines up.
Yeah. Oh my God.
Like I said at the beginning of the podcast, I unfortunately don't get very involved with an international portfolio. We have actually a completely different division of QuadReal that looks at international investments. However, we do see and look at, we call them proxy cities, right? So we see Seattle as a proxy for Vancouver. So we try to analyze what happens in Seattle with its tech industry, aeronautics, et cetera, and see what kind of conclusions we can draw from what's happening in Seattle, maybe in San Francisco, and extrapolate them to Vancouver, right?
And sorry, when you say proxy cities, so you're using basically other cities along the West Coast to kind of play out what the potential is?
Yeah, I mean, it's not necessarily just geographic, but definitely, I mean, if you look at Vancouver and Seattle, right? Like geographically, they're identical, you
right?
Say, but then you dig a little deeper into demographics and into the economy, and they're also quite similar, right? So, big tech presence in Seattle from Amazon and Microsoft. Well, Vancouver has that, right? And so then we ask the question, okay, well, why is Amazon and Microsoft setting up shop in Vancouver? What has drawn them away from Seattle? And sometimes in part, I mean, for a while it was immigration issues, right? Like there was a bit of a negative sentiment in the United States towards immigration, whereas Canada is very open to bring in new immigrants and do the process quickly. We basically have a very sophisticated immigration process here that makes it easy for companies to bring skilled workers in. But also, we look at San Francisco, the cost of living in San Francisco was going crazy. So if you're Salesforce or Amazon, you're trying to bring in a skilled worker and you offer them a pretty good salary, but then they're like, okay, where am I going to live? And most of my income is going to be spent on housing. That doesn't sound as attractive anymore. So they have to look at other places where, the city itself is fun. Like it would be hard. No offense to anybody out there from like Lethbridge, but it'd be hard to set up shop over there and try to attract international talent because the city itself is not, a destination call.
Right.
Vancouver, gorgeous city, and compounded with the fact that it's close to the United States, it's easy access to the Asian markets. It puts it in a pretty privileged position to continue to attract skilled workers. Other cities that I know we have activity in is Austin, for example, in Texas. Same pretty strong tech sector. Tech seems to be the profession of the future. I mean, maybe manufacturing is coming back to certain places, but skilled labor, value-added labor and value-added industry is where you see the most job prospects and the most continued growth in terms of employment.
Mm-hmm. So like logistics, I guess thinking about the tech sector, and then also thinking about kind of industrial commercial space. It's all kind of setting up for people having goods delivered to their homes.
Yeah.
Tech workers, tech companies continue to grow. It makes a lot of sense.
Yeah, you guys should have somebody from industrial come chat with you in your podcast. I can introduce somebody else at QuadReal if you want. But our industrial sector has been doing great.
Right. It's just been on fire for the last couple of years, right?
Yeah.
It seems to be the one kind of recession-proof of all the commercial assets, right? It just seems to keep going and going and going. That's great, Matt.
I just have, so I got, two more questions. One is, Raul, you've been in Vancouver for a great number of years. You have the backing of QuadReal. I'm just wondering, for any mom and pop investor, you kind of mentioned transit-oriented developments, but if you had to direct somebody, say for under, let's give you $2 million.
Mm-hmm.
That might be too large.
1.5. Then it takes a lot of the single family out, I guess. Okay. Well,
all right, $2 million.
Let's say $2 million. Your nephew wants to buy an investment property in Vancouver. Where are you directing them?
And he asked $2 million.
$2 million.
I'd tell him to buy more than one.
Yeah. Okay. Yeah. So one bed's on transit.
Yeah. Yeah.
Is certain neighborhoods? What's your favorite spot?
I definitely like the whole area around the Emily Carr University campus.
False Creek Flats.
Yeah, False Creek Flats is great. I still think that the Olympic Village is very attractive. It seems like whenever we do demographic studies, the millennials that we're going after, after Gen X?
Millennials.
No, Gen X, millennials, and Gen Z.
Right.
Oh,
the cohort of people we're going after, they really like their lifestyle choices. So it has to be somewhere that it's attractive to live. There's stuff to do. Like there's a seawall, there's a beach, there's concerts, there's games to go to. So yes, I would actually recommend to stay away from a single family home. This is completely personal opinion. Why? Well, first of all, when you own a single family home as an investment, you're on the hook for all the repairs. You don't split them with your neighbors, right? Like whatever goes, you had to fix yourself. And single family homes are not a very efficient way of living. If you fast forward, several years down the road, I think Vancouver announced recently that they're not going to create any more single family home zoning. Right?
Mm-hmm, mm-hmm.
It's inefficient. It's more efficient to have vertical buildings where a lot of people share, heating systems, roof, envelope. Like that's the more efficient way of living than single family home. So and also diversification. So that those $2 million for your investor, they'll buy one property, and whenever it's vacant, they have to subsidize it. If they buy two properties, well, now they could just cut the risk in half in terms of vacancy, right? Somebody moves out, well, at least they still have the income from the other one, right?
Right.
So, and I would also recommend try to buy something as new as possible for the same reasons of capital costs coming up. Definitely do look at the depreciation report of the strata. Make sure the strata is properly funded. And if you're going to be managing it yourself, make sure it's not too far away from where you live. Because my day job today is residential asset management, but I also had an investment property in the past, and I had to go. I got phone calls.
There's a reason why you don't have it anymore.
You were a plumber on Christmas Day.
Exactly. I have been doing a lot of things on days that I didn't want to be working. It comes with being a landlord, right? So if you have to now drive a couple hours away to be doing that, you got to look at your opportunity costs for yourself, right?
Right.
Like, I could have been watching football.
You know what? Opportunity costs, but also, it's a long-term play. And if you're every 3 weeks, you have a massive headache, chances are you're not going to have you're going to be looking to unload it sooner than later.
Right. And I mean, $2 million is not going to buy you a new house.
Yeah.
Right.
No.
The house is going to need a lot of love and a lot of elbow grease.
So 3 1-bedrooms, I think, is in newer buildings.
Yeah.
And I guess, I'm guessing your final question is the forecasting. What do you think is going to happen in the market next 1, 3, 5 years out?
Well, like I said, the fundamental of Vancouver continues to be strong. More people are going to be moving here than homes are going to be delivered. So I continue to see an imbalance between supply and demand. And the result of that imbalance is continued rises in rents and continued rise in property values. So, I continue to have at work and personally an optimistic outlook, and I'm still bullish on Vancouver as a whole for 3, 5, 10 years.
We have this section called segment, I should say, called the 5 Wire, 5 lighthearted questions that we end every episode with.
All right.
Can you stick around for that? I know we've taken almost, about an hour of your time, but...
Yeah, I'm ready.
Yeah, all right. Okay, so question number 1 is, what is one book you've read recently that you'd recommend for our listeners?
So I think I mentioned it before. Anyone who wants to understand real estate should read The Triumph of the City.
Triumph of the City.
Yeah, it's easily available. You can find it at Amazon. There's an audiobook about it. It's a great, great book.
Fantastic. In the last few years, what new belief, behavior, or habit has most improved your life?
It's funny. I was reading your questions this morning in my office, and I mentioned that to somebody who was in my office chatting with me. And I started doing overnight fasting. I actually lost 30 pounds in the past, 2 years. Like in August of 2021, I was 215 pounds, and I'm less than 190 now.
And you attribute that almost entirely to fasting?
Well, I used to have, this is probably not going to be rocket science, but my breakfast used to be one of those
ice cream.
Close. Double smoked bacon sandwich from Starbucks.
Yeah.
That was like my daily breakfast. Right?
That'll do it.
And I substituted that with overnight oats with protein, etc. And now I don't eat anything before, call it 10 a.m. So that has significantly.
So you're doing what is that? A 16-8? Kind of, you're fasting over the night. You don't eat breakfast, then you eat during the daytime window.
Yeah, so I don't think I fully get the 16-hour fasting gap because I have dinner, call it 7, a little bit later. So from 8 at night to 10 in the morning, I don't eat anything. So that's 14 hours.
That's great.
Yeah.
What have you been binge watching lately, or a movie recommendation?
I've been really into Unbreakable Kimmy Schmidt.
Unbreakable Kimmy Schmidt?
Unbreakable Kimmy Schmidt.
Oh, okay. Unbreakable Kimmy Schmidt.
I'm not sure.
I don't even know what that is.
I feel like I've heard of it, but I don't know.
You know what? Like it's a comedy on Netflix. Tina Fey is the producer, and you know how you're sometimes like hovering on Netflix and then the thing just starts to play, and I was like, I'll just keep watching. And it was hilarious. So I just
that's a good one.
Unbreakable Kimmy Schmidt. All right, that's a first. Favorite band or music?
Pearl Jam. Yeah, Pearl Jam is my favorite band. I wish I had. I've been trying to expand my horizons now, and I'm getting more into. I love The Weeknd, for example. I think is fantastic. But yeah, mostly alternative rock and.
Sounds like 1997 at the Den to me.
That's right. That's exactly. Those are my roots.
But also kind of roots in Mexico, because I feel like older rock in Mexico is always a thing, right?
For sure. Oh yeah.
You a big Maná fan?
No, I'm not a big Maná.
I feel
That's like asking like someone from Quebec if they like Rock Voisine, I think.
Yeah.
It never. You're a big Rock Voisine fan.
No, but Maná is it's definitely popular.
Yeah.
It's kind of like the Tragically Hip for Canadians, right?
So
I have a feeling if you
because you're a big hip fan.
I love the hip.
Okay, wait, but Maná, I'll put this out here. I think their lyrics are very it's hard to be like a guy and self-respecting and listen to some of those lyrics. I don't know. My Spanish isn't that good. I just hear a lot about butterflies and stuff like that makes me feel a little uncomfortable.
Yeah, no, Maná, I mean, growing up in Mexico, you can't get away from it, right? It's kind of like Nickelback, I guess, if you're from the prairies.
Right.
So you'll listen to a song like, oh yeah, I kind of like that song, but you feel guilty admitting it in a way.
Yeah.
And then Maná, I actually lived in Puerto Vallarta for a while. They had a bar there called the Santos or something like that. And they were constantly there. So not that I became friends with them by any stretch of the imagination, but like I met him a few times and I still couldn't. I don't think I ever purchased a Maná song album or on my phone said, oh, play some Maná right now. You know?
Yeah.
Does Vicente Fernandez get a lot of play in Mexico City, or is that more of like a rural?
That man's an institution.
Mea culpa.
Yeah.
Sonia's from El Salvador who works with us, and I remember when he passed away, last year, whatever, it was like
we played.
It was a huge thing in here.
Yo guitar on medio or whatever.
Vicente Fernandez is like I challenge any Spanish-speaking person, maybe not in Spain, but from Mexico to Argentina, everybody knows who he is. Same with Luis Miguel.
Right.
Yeah.
So. Last question for you, Raul. Something you have purchased for under $1,500 that has changed your life in the last few years.
I bought an Echelon bike, which is
e-bike, right?
It's like a Peloton, like a like a slightly cheaper version of the Peloton. And I think the trick to the success of the usage is it's a little unsightly in my living room, but it's in front of the TV. So, when you're sitting on the couch in my previous life, sitting on the couch watching TV, now I have a bicycle there. And you almost feel guilty because it's like the bicycle's looking at you. It's like, you could be doing the same, watching the same show, sitting on the bicycle and pedaling. So that's what I do now. And most shows are 30 minutes. So you get 30 minutes of cycling.
So lose the breakfast sandwich, get on a bike, Kimmy Schmidt. We got it. We got the workout plan.
That's right.
No Maná.
No Maná.
How can people find out more about what you're up to, Raul, and of course what's going on at QuadReal?
Well, I mean, QuadReal, we have a very strong social media presence, so you can find us on LinkedIn. I'm pretty sure we almost have a daily post. It seems there's a lot of information about QuadReal on LinkedIn. Visit our website, QuadReal.com. If you're a student out there, reach out to our campus program. If you want to explore our internship opportunities, we invest heavily in our interns in our intern program. So if you're a student, check it out. Reach out to me if you can find me on LinkedIn. I always have time for a coffee with anyone who wants to talk real estate. Listen to this podcast too.
I'm sure there's some SFU and UBC students going to take you up on that. So that's great. Well, thanks again for taking the time today.
Hey, no worries, guys. Thanks for having me.
So there you have it, folks. Our discussion with Raul Jaime, VP Investment Management at QuadReal.
Really enjoyed that conversation with Raul. And if I want to summarize some of his best points while simultaneously telling people to check out our Instagram account,
Yes.
let me just bring this up here. Okay, here's Raul Jaime
That's right.
is VP.
I think most people say Jamie here.
I think a lot of people would say Jamie, but we want to make sure we get it right. Raul Jaime is VP of Investment Management and Deals and Acquisitions. His top 4 tips will supercharge your investment strategy. Now, the 4 tips,
I like the hook.
Focus on transit-oriented development. Is that right?
Yeah, that makes sense.
Okay. High-quality transit is the future of the Lower Mainland. Transit-oriented development results in vibrant, walkable, amenity-rich communities.
Okay, nice summary.
Okay, now 2, buy in newer, large, concrete developments.
You know, Raul has some experience in older single family.
Yes.
And I think he's had some
really turned him off.
Negative experiences. But the reasons for buying in newer concrete make a lot of sense.
Limited exposure to major capital demands, so spikes in maintenance costs or special levies. And keep unit entitlement low for reduced cost sharing.
Right.
So in other words, newer, larger, you limit your risk. There won't be huge expenditures. You still collect rent.
Right.
Life's good.
Economies of scale.
And number 3 is don't buy older detached homes. I think Raul kind of went over that a bit on the show.
Right.
But you're going to end up being your own plumber on Christmas Day.
Right. Which I think literally he was.
That did happen.
That did happen
That's a
to
true
Raul.
story.
Right.
And then last but not least, small units are better than large units. Don't buy a 2-bedroom or a 3-bedroom condo. Buy 2 1-bedroom condos. And why would you do that, Matt? Well, higher rent per square foot. Greater tenant turnover means you can keep up with market rent, right? You're not dealing with restrictive rent increases. You have more diversity in your portfolio, and you get multiple units will offset potential vacancies.
I like that when we gave him $2 million and said, "What would you buy?" And it was multiple units.
Multiple units in Olympic Village or False Creek Flats.
Yeah, no, and it was a great kudos to you on that Instagram post. It was
well. Here's the
doing
thing.
God's work over there, and specifically you.
I wrote that out, and past guest, fan favorite Peter Leung,
the investorpreneur.
Yeah, so investorpreneur said I would do the exact same thing. So now I've had 2 guys that focus on global real estate give me the same or agree with that advice. Multiple units, False Creek Flats or Olympic Village. False Creek Flats, there's not a lot to choose from.
No. Canvas.
Yeah, pretty much. Yeah.
Olympic
Village is great.
No, yeah, it is. It is. And the rents there are sky high. So
absolutely.
No, it was a great conversation. He's a super smart guy. A really great story. His way to QuadReal, I thought was interesting. Mexico via, the backup QB on the Dinos and University of Calgary, back to selling real estate in Mexico, opening up a shop in Calgary. I mean, and then over to Vancouver. It was a great story, and I'm happy I can call him a friend.
It's amazing how good of a skier he is for growing up in Mexico City. Maybe
quarterback, and snowboarding is.
He said football, American football is huge in Mexico, though.
In Mexico City, yeah,
is it?
I didn't know that.
I didn't either.
No. But anyway, great having him on the show and great having him down to the studio. What else do we have? I feel like we've already pitched Instagram enough. People are still really have their hearts set on those shirts.
You know what? We've had a handful of people just in the last week reach out, sending more shirts out.
Yeah.
We've got new maroon.
That's right.
Burgundy. New maroon 5 shirts. We've got the new burgundy shirts are coming. They're hot in this week. We don't have them yet.
Right.
But they will be going out. So definitely follow us on Instagram. Share your favorite episode. That's one way that you might get a shirt. But also just comment, interact in the community. We're talking to the VREP community and we're really enjoying it.
Yeah, absolutely. So that's on Instagram. We also have our new website, VancouverRealEstatePodcast.com. We are getting so much feedback, all positive on the site. really easy to dig down into certain topics, go back through the back catalog and isolate for certain topics through the synopses that we have there. We also have the Livewire. That's our weekly mailer. The stats are coming out today, tomorrow. We're going to have those out, and sales ratios before anyone else. We got Deal of the Month. We got a bunch of VIP pre-sale projects. There's no reason why you shouldn't be on the Livewire. Adam, also, we have, of course, tried and true private client services.
Because, Matt, if you are not using PCS, you are standing still while the rest of us power walk by. You get sold prices, days on market. You basically get realtor level information. It's free. It's available at your fingertips. VancouverRealEstatePodcast.com. Sign up for your own PCS account. This is the time you want to be monitoring PCS. There are deals out there, and it's hard to know about them when you're not being kept in the loop.
Absolutely.
Sure.
That's private client services at VancouverRealEstatePodcast.com. And if you want to talk about that or anything else, Adam, you can try me at 778-847-2854 or Matt at VancouverRealEstatePodcast.com.
Or you can try me at 778-866-4574 or Adam at VancouverRealEstatePodcast.com.
We also got that Kokomo line, and we also got the new sign. If you're seeing this video, the new sign, Vancouver Real Estate Podcast. We're like the Granville Strip in Kokomo Studios now, but you can reach out on the Kokomo line, info at VancouverRealEstatePodcast.com.
Well, have a great week, guys. We're back with some more great content next week. We have some phenomenal guests coming. I can't even believe the lineup here.
Yeah.
So much to look forward to. So have a great week, and we'll see you next time.